And I like this little zone where you have 1, 2, 3, 4 highs all in close proximity. So plenty of stops will be resting above there. A lot of people getting short on Bitcoin, trying to catch the hero trade down to fucking 12k or whatever. I think they get punished first. Honestly, if I had to put probabilities on it, I think the bottom is more likely to be in than not. But I'm not going to try and bottom pick or guess, because if I go to low time frame, still no confirmation of that. Would need to see much more price action around here. Would need to see price obviously show some impulse back up. Maybe even sweep that. But just hold, put in a bit of a range, a bit of a consolidation down here before considering any up move. There's no need to preempt anything. There's no need to get ahead of yourself. But I do believe it's setting up for a nice strong move. It's a tale as old as time, isn't it? We break down, we set a range, everyone gets too bearish and short, we then punish them, and then if we're going to continue down, we continue down. We break down, we set a range, everyone getting bearish into the range lows, bearish into probably support, and actually it is support, right? Because we've held this range. Now we are trying our best to lose this range, but we've been here since 18th of March, so fucking 8-9 weeks. But remember what's below us at 24 to 26k is the retest of a 9-month reaccumulation range. So there are absolutely going to be people waiting to buy that. So I can say very confidently that we are going to find support. Now, does that mean it's 100%? Absolutely not. Nothing's 100%. But I would strongly favor a bounce before any significant downside. It's very rare that Bitcoin just rolls off a cliff and goes all the way down while everyone's nicely comfy in their shorts and has sold all their bags. Because I don't see a lot of people long at the moment. I see a lot of complacency on the bear side. I don't think. I just don't feel, I don't see any reason to be bearish here. I see everyone bearish, everyone saying it's over. I looked on Twitter. It's just everyone is just mistaking a simple range for something more, right? We're still in a range. If the range breaks, then you can look at continuation plays. But if you're shorting here, remember this wick exists. We are not below. The liquidity is below this wick. Where we are right now, which I've already drawn, where we are right now is still within range. The range is 100% valid, no matter how bad it looks. I don't know how many times I'll have to go back to previous ranges where it looks really bad and ends up not being really bad. Times where it looks really bad. I remember this one. Everyone was saying this was just getting ready to look how low impulse it is. It's just going to roll over. How many times do ranges look like shit? Very often. They're designed to look like shit. Remember this one? When price looked like it had no bid, no power in it. Remember this? Now this one was fucking shit. And then you had the USDC FUD. But look how quickly it reversed. Right? The time to get bearish is not when it looks like a really easy short. Or when it looks really bearish. At the end of the day, I think it's more likely to be a trap. And even if we're going lower. So I'm not saying that I'm massive full bull high time frame. This whole thing could still be distribution. But there's loads of room to move up there. Right? Loads of room. And so personally, I'm looking for a long. If I can get it. I am still short Litecoin. I don't see any reason to close the Litecoin one just yet. But if Bitcoin could do that pump that I just mentioned, I could feasibly see Litecoin pumping up to here and putting in a lower high. But eventually I think it wants to make its way back to this trend line and back down to this big block of liquidity, the big block of demand, sorry. So I've taken half profit, but I'm not particularly interested in taking full profit when it's in the middle of nowhere. To the naked eye, it might seem like hard to gauge this, but watch my lesson on marking support and resistance. If you zoom out on Litecoin, if you zoom out on Litecoin, so way zoomed out view would be a monthly chart, which we're at here. Monthly support is here, just where I have my cursor, which is 70. That's the last place you could call support on the monthly. Right? And after that, there's no, everything here is just super messy. And this type of price action on the monthly, this shit does not resolve upwards. Right? This was nice. Bullish impulse, nice full candle. A little bit of a stopover. Consolidate, bullish impulse, nice full candle. Super toppy looking doji candle. A bearish hammer type candle. So if you remember those ones from one of the candlestick lessons, when you get a hammer type of candle that doesn't push past the previous high, that can be bearish because you had your down move and you had a lot of buying to counteract it, but the buying failed to make us go higher. So you had 2 bearish candles in a row, really 3. That's not really great either. That's basically another doji. And God knows what we're doing this month, but it doesn't look great either. It looks like this is definitely more discretionary. I'm not saying that this is like backed by data, but what this looks and feels like to me is the whales and the smart money, the people who are early and who are the Litecoin whales, are taking the opportunity to distribute on everyone who is kind of sympathetically buying Litecoin on every dip because they're expecting the Litecoin halving rally. We had the halving rally. It was in December, January, and a little bit of February. That was the halving rally. That was it. Done. Over. The market's telling you very clearly that that's what it was. Because we had our big drop in March, and it tried to have a second rally, and it couldn't go higher. That's an FTR, failure to return. It then had an impulse down, a sideways consolidation, another impulse down, tried the rally again, took out, and again, this is like a bit of where you can understand the whales game. As soon as it reached any liquidity, the whales just got out. Smart money is exiting Litecoin. They are not entering it, they are exiting it. So even if the overall market rallies, I'm bearish Litecoin. For the very reason why everyone thinks they're bullish Litecoin. The halving move has played out, in my opinion. But would I short it here? No, because again, it's in the middle of nowhere. So you either got short up here, or you wait until a bounce. So if you get a valid bounce back up into this area, so if you've got a valid bounce up to there and some rejection on lower time frames, you could reload a short and head back down to here. But right now, if you miss the Litecoin move, do not FOMO in. Right? Because you don't know what you're doing. Go watch the lessons if you're thinking about shorting Litecoin and you don't want to listen to me. Go watch the lessons. Learn how to build your own system. There's no point trading what I say if you don't have some system of your own. If you're going to listen to what I say, it's not to copy trade it. I don't do signals for that very reason. Because if you don't know how to make your own trades, you're going to get fucking wrecked in the market. Right? All the best traders in here, all my captains, all the best students I see, they will say that my words are merely confluence, meaning their own system, which they have worked hard to build, is telling them to go short Litecoin. Then they find out that I'm short Litecoin and they say, great, that's a nice confluence. It's nice to know that Michael has also got the same opinion as me, as my system, and therefore I can take the trade with confidence. Right? Not saying max short Litecoin because Michael's short. It's not how it works. Because you don't know my time frame. Even though I made this one very clear, I said it's swing trade. I put it in the swing trading chat. But a swing trade could be anything from 36 hours to fucking 3 weeks. So if you don't understand those type of things, the execution side, the time frames, the analysis methods, the reasons why I'm doing it, then don't follow it blindly. Or if you do follow it blindly, it's your own funeral, right? So, AMA questions. Crypto creator, if you are swing trading and don't have time to be present at entry to see if it really forms a bottom or just goes lower, do you just blindly set limit buy, or how would you go about it? I like, even with swing trading, I don't blindly do anything. For me, so it's a good question. Let me explain. Let me do a hypothetical swing trade that I would take on Bitcoin, right? So a hypothetical swing trade that I will take on Bitcoin, let's imagine it sweeps out this liquidity, reclaims, and then moves up to the trend line and takes out this liquidity at the red box. That would probably take 3 days, 4 days. So sweeps on Friday, takes it out on next Wednesday, right? Just hypothetical, okay? So even though it's a swing trade, it's not possible to just set an order, because you need to have multiple things happen. So first, I would set an alert. I would say sweep, question mark, if reclaimed, and valid test, long to red zone above. Right? So then what would happen? If price came down and swept there, I would have to jump on to the charts. I would jump on. I would maybe go to a lower time frame. I would say, okay, prices went below this low and it's now back above. I still wouldn't enter because I have to see a retest. So let's imagine now we're at this point where price has done this and it's here. And so we're at this point in the chart and I'm on a lower time frame. So I'd say, okay, my first alert fired. I came onto the charts. I watched for an hour, a couple hours on and off, and it came up here. Now I would say, oh, fine. So if it comes back to this level, I would set another alert just slightly above it, and I would say, test. Look for entry. Then I would log off again. So this is why you can swing trade it, right? I would log off again. I would go do whatever I'm doing, and I would wait for that alert to fire. If the alert doesn't fire, I don't trade, because this particular trade would mean you need a retest. And so then I jump back on and I see the price is here. My alert fires. So what do? I then go to a low time frame, and this is the part where I would actively trade it. So even though I'm a swing trader, I would have to spend the next 2 or 3 hours on the chart to try and get an entry, because price is here. We've got our low. I know where my target is above. I now need to see an entry trigger, and let's imagine that that is an under over. So here we are on the chart. This is a 15-minute chart now, and it comes up and it goes down and it breaks structure on this 15-minute under over. And I watch all of this from 6:15 to 3 o'clock. It could be 5-6 hours that I'm watching it unfold. Don't have to be sitting at the chart for every minute of it. But again, you're watching it here, you say, okay, set another alert. If it sweeps that, great. Potential 15-minute under over. If it breaks here, you set an alert here, right? So you come in, you say, if it takes that low out and then takes out this level, out of an MSB, out of a market structure break on that low time frame. So I would set an alert here, and I would go way off. Then when that one fires, I would jump back in and say, okay, we've got market structure break. Now I want to get a fill. So either you fill some right away on the break, you put your stop down there, and you start to allow the trade to develop. Okay, maybe you add some on a retest, whatever. But at this point, after this break, then you're watching the next 2-3 hours of price action like a hawk. You're actually on the chart, watching it, getting filled. Or maybe you just enter all at once. That's fine. You're going to get a slightly worse risk reward, but maybe time permits that you have to do that. That's also fine. But whatever you do, you're active. So everything up until now. So here, you just had an alert. Yeah. Here you had an alert. Here you had an alert. And here you had an alert. I'm sorry. So there's 4 times you basically just set alerts and you could log back off to update your trade, right? Now, here is where you're active. So this is where you're active. So the green box is where you're actively trading as a swing trader. The yellow circles are where you're just setting alerts and you can be passive as a swing trader. So I get filled here. Then, when I have all that